Welcome to the deep dive. Today, we're going to take a bit of a shortcut ourselves and really get into the ENSO token. That's ENSO. We're basing this all on a video review you shared. So the mission, pretty straightforward. Quickly unpack what this thing claims to do, look at its numbers, and get a feel for what the community thinks.
Right. And ENSO, from what the source material tells us, is setting itself up as a protocol for blockchain shortcuts. The main goal seems to be helping developers build and launch new on-chain systems really fast. They're hitting hard on product, community, and growth. So how does it actually work, these shortcuts? Well, ENSO maps every single on-chain interaction to these things called shared engines. Think of them as like standardized backends. Everyone can plug into them, so you're not rebuilding the basics every time.
Okay, conceptually, yeah, that makes sense. But lots of protocols say they simplify things. What's the specific edge here? We read about action abstract and handling transactions with simple compounds. What are those, really?
Yeah, good question. The analogy helps, I think. If normal development is like getting a huge box of loose Lego bricks, ENSO gives you pre-built sections. Those are the action abstracts. They just snap together. And the simple compounds, those are basically efficient, pre-checked bundles of code. They turn complex, multi-step stuff into one action for the developer. Easier, faster.
Okay, that clarifies it a bit. But here's something odd the source mentioned. It described the protocol as a no-money blockchain or smart contract integration. That sounds weird. Does it mean no gas fees or maybe no cost to start building? What's your take?
Yeah, that phrase definitely needs context. You have to read carefully. It's almost certainly not zero gas fees.
Yeah.
It's just how networks work, right? It seems more likely it's suggesting that the integration part, the act of integrating, is separated from the usual financial mess or complex treasury stuff you need for big contract deployments. So it cuts down the development cost tied to managing money flows, which can be a real headache for builders.
All right, interesting angle. If the tech holds up, we should see it in the market. Let's pivot to the numbers then. The source has the price currently at almost $2.06, and the supply figures. Total supply is 100 million tokens. Max supply, though, is 127 million. That 27 million gap.
That's usually for things like future vesting or maybe developer incentives, network rewards, something like that. Worth keeping an eye on.
And what's interesting is its market presence already. For a tool aimed at developers, it's already on some big exchanges. We're talking Binance, Bybit, Uniswap, even Binance Alpha, BitKit, and KuCoin are listed in the source, getting listed there early. That says something about their infrastructure, their liquidity. It adds a layer of validation.
Okay, and the community vibe. The source pegs it at overwhelmingly bullish, like 85% bullish, only 15% bearish. It also mentions something vague, good inside people sharing charts. What do you make of that? Synthesizing that, it suggests strong internal belief. Probably key developers, maybe early investors, are actively sharing positive data, roadmap updates, usage numbers. It points to confidence within the core group about the tech and its adoption. Now, about that strange data point, the holder distribution. The source said almost 10,000 MUth per holder. That's clearly a typo or translation issue, right? Me per holder makes no sense. It most likely means almost 10,000 tokens per average holder, which, if true, suggests, well, significant concentration.
Yeah.
Whales, early backers maybe. That's an important dynamic.
Yeah, that clarification helps a lot. Okay, last piece, the analyst rating. The source gave it a 7 based on chain activity and charts. What does a 7 out of 10 usually mean in this context? Yeah, good, bad, average.
Generally, on those kinds of scales, a 7. It often signals strong short-term momentum, good current market dynamics, but maybe it hints at some medium or even long-term questions about stability or risk. In this case, it sounds like the rating is really driven by the current transaction buzz, the fast listings, reflecting that rapid growth focus we talked about.
So wrapping this up for you, the listener, what's the bottom line? The source was very clear on this, and we have to echo it. Always do your own research. Dig deeper yourself before putting any capital in. That applies to everything, no matter how bullish things sound.
Absolutely. So the main takeaway. ENSO looks like a pretty sophisticated tool for developers. It's focused on making complex stuff simpler, speeding up launches, and it's got backing from major exchanges and apparently a very enthusiastic community, at least according to this source. It wants to be foundational for building Web3 quickly.
Right. So here's a final thought to chew on. ENSO's whole pitch is about building these shortcuts. How crucial will actual developer adoption of their specific action abstract feature be, especially if they want to reach that max supply of 127 million tokens? If those extra tokens are for future growth, they need people using the platform to justify it. Definitely something worth exploring further on your own.